Hey, welcome back. Buying a home just got a little bit more complicated as of a week and a half ago. And in today's video, we're going to talk about how this is impacting current home buyers right now, which is the new NAR settlement and all these changes that are affecting our housing market and how we buy houses in the United States. And I'm joined by Jim Black. Thank you for joining us today.
Thanks, Jason. Thanks for having me on. I'm excited to talk about this topic. It's complicated, but once you explain it, it can be really simple. So looking forward to doing that.
Absolutely. So I get some comments on the channel regarding like, how is this going to impact your housing market? If you're looking to buy a house, what changes are in play right now? And there's really like two major changes that just got enacted about a week and a half ago on August 17th. And those two are I'm obviously an agent here in Sacramento. Before this settlement, I can go onto our local MLS, which is the portal that agents use in order to list their home for sale. When an offer gets accepted, you mark it pending. And then of course, when it closes, you mark it closed as well. And those changes all get directed to Redfin, Realtor.com, Zillow, etc. So before, there was a field on the MLS in which you could put, or you would put, the amount of commission that's being offered from the seller to the home buyer. But that was a field that consumers weren't able to see, but agents were able to see. So now that field is entirely gone. So there's no offers of compensation on the MLS. That's number one. Number two is prior to looking at any house with an agent, you have to sign a buyer broker agreement, which basically stipulates, here are the services I'm going to provide, here's a timeline, and also here's how much I'm going to ask to be paid for my services. So those are two main things. Anything you want to add regarding that, Jim?
No, definitely. And again, sometimes as a first-time home buyer, you don't know what's a thing of value. You don't know if you should sign a document or not. And so it's just important to know the choices that you have available to you. And there are 4 categories of those choices that we have.
Absolutely. So let's talk about that, because how agents get paid is a little bit different now, potentially. And there's at least some options for buyers out there, and some that I'm guessing that you guys who are watching today's video probably are not even aware that these are options for you if the seller is not willing to pay your agent's commission. So again, you're looking at houses, you have an agreement signed with your buyer or your buyer's agent, and let's just say it's 2.5% of the purchase price. When you write an offer, you probably ask for the seller to pay for that, but that is all negotiable. So let's talk about the 4 ways in which you can get paid or pay your agent. And Jim has a really good kind of an Excel spreadsheet looking at this.
Yeah, this is a sheet we've created called the commission choice example. In this example, again, every one of these variables is different to your specific area, parts of the country. Rates are changing every day. Closing costs and down payments change also. So in this example, we're using 2% as our commission amount on a purchase price of $1 million. I used $1 million because it's just simple round numbers to use to show the differences. We color coded this spreadsheet to make it be green is the best approach, red is the worst approach, yellow is and paid by the buyer, and then the blue is paid by third parties, aka a lender. So in any of these examples, the commission or compensation paid to a buyer's agent can be in addition to what's known as the total amount of closing cost credits that's issued from any product you choose. That's known as interested related parties or interested party contributions. So for example, on an FHA loan, you can have up to 6% credit from a seller for closing costs. In addition to that, you can now have the compensation offered to the buyer's broker added into that number. So the government agencies, Fannie and Freddie Mac, along with Ginnie Mae, have all created a lot more flexibility to offer a better, convenient way for first-time home buyers who could be affected by this change to have options available.
Yeah, so let's just talk about that real quickly. So you said for FHA loan, the maximum amount that a seller can give you as a credit is 6% of the purchase price, right?
Correct.
So if you want to have the seller pay an additional amount above that amount, you can do that for commissions to the agent. That's what you're saying?
That's correct. So for example, if we were getting 6% credit from the seller and we got 2% on top of that for the commissions for the buyer's agent, they would be getting, in essence, 8% credit in that transaction.
Yeah.
6% going to them, 2% going to pay a fee to the agent who's been creating value on the buyer side.
Yeah, and that's something fairly new as well, because the big question was, gosh, are buyers going to be able to finance this? It's just going to add to that total amount that of credit that the seller can pay based on the loan type. And this is kind of a new change here that you can. It's not included in that 6% cap for an FHA, for example. And what's the cap, by the way, for VA?
It's 2% if you're not paying off any cash, and it's 4% if you're paying off debts.
Got it.
So
Okay,
again,
cool.
2% plus the compensation to the buyer broker agent, or 4% plus the buyer broker compensation, depending on if you're paying off debts to qualify. So there's a huge advantage there. If you're a veteran and you have some debts, we can put that into the loan amount, pay that off, and that could lower your ratios to qualify.
Okay, cool. So maybe if you can just talk us through the green and then going to the right, yellow,
Absolutely.
red, and blue. Yeah.
Absolutely. So this spreadsheet is our spreadsheet. It's proprietary to our company. We have it really dialed in. So if you want this, please reach out to Jason or I to get this. Again, it's specific to the exact situation you're in. We call it commission choice because we believe that a buyer's agent should be rewarded for the value that they provide a buyer. There's so many things that go into a transaction. You should have representation. You should not be doing this on your own, because there are areas of the country that have septic, they have well, there's certain inspections, there's ADU laws, there are rental laws, so many things in your micro market. It's important to work with local professionals in your marketplace.
With that said, I mean, I think there were some people saying that, gosh, well, if buyers have to pay the commission, they're just going to work directly with the listing agent or the seller's agent. And guess what? The number one reason why people get sued in real estate, and that's because, or one of the main reasons, is when the seller represents both parties, because you can't, or you have a challenging time, getting the best price for a buyer, but also for the seller as well. So it's risky to work with directly with a listing agent and not have an agent who is representing you for your best interest.
Yeah, by definition, the word fiduciary cannot be used by two parties. It is the benefit of one party. So how can someone be a fiduciary for you as a listing agent and represent both sides? They cannot do it. It's impossible.
Yeah.
So,
I mean, there's been a handful of times I've done it in my career over, selling over 100 houses. But it can be very challenging. Let's just say that, especially if you have an agent who doesn't know what they're doing and they're telling one party one thing, another party a different thing. It just can get totally messy. Anyways, we're getting off track here, but let's talk about the green part here first.
Absolutely. So the green part, you'll notice, is the traditional way a transaction has been done in the past. So basically, in this example, the seller isn't wanting to give the credit. So we're raising the purchase price and offering a credit. So the biggest thing on the sheet to be aware of is to look at the net to seller sheet at the bottom there. The net to seller means it's the same number. If you look at it, it's $1 million across the board for everybody.
Yep.
So that's the most important thing to think about. The seller is getting the same bottom line net to them. So in the first example, purchase price is $1,020,000. The commission of $20,400 is being accredited back from the seller to the buyer's agent. The buyer is bringing in the down payment of 20%, and they're getting an effective loan of the 20% down, 80% financed. The next category, you'll see that the buyer cash to close is $214,400.
One thing I want to mention too about this too first, Jim, is that seller paid. I mean, you don't necessarily have to increase your price in order to get the seller to pay for it. So this is one option, but there are scenarios in which you could place an offer on a property and the seller is already willing to give your agent a commission. So the price is already baked into the fact. So this is an option, but it's not necessarily one you have to take into consideration.
Correct. Each market has different dynamics. So again, we're just sharing the 4 categories. All these variables can change. So again, we know if it's seller paid, the buyer's not paying for it.
Right.
Next category, which I think is going to be very popular, is buyer financed. In this example, all we're doing is increasing the loan amount. So you notice that the loan amount is based upon $1 million purchase price, and now it's $820,000 versus $800,000, which would normally be 80%. So all we're doing here is we're shifting the responsibility from the seller to the buyer in the form of a higher loan amount. Most loans that exist throughout purchase prices up to about $1.1 million or $1.2 million throughout the country will allow for a higher than 80% loan to value. Some of those products have mortgage insurance, some don't. So in this example, you'll see from green to yellow, the rate went up by an eighth for a difference of 80% versus 82% financed. You'll see that the buyer's cash to close is still the same $10,000 being the closing cost example in all of these options to show that the seller is still getting the $1 million net that they expected to get originally. So again, yellow is buyer financed. This is going to be a creative bucket for us as mortgage bankers and brokers to really be able to shift and pivot much differently than large banks. Large banks will not be able to pivot this quickly because they don't have customized solutions. They are more vanilla and generic in their product mix.
So one thing about this on the yellow part is the loan amount is $820 in this example. So what basically he's saying here is that it's 20% down, which is $200,000, but you add $20,000, which is the amount of commissions being owed to the buyer's agent. So in this example, the buyer is financing the commission to their agent, in other words, increasing their loan balance by that commission amount. Just want to make sure everyone's clear on that.
Yeah, exactly right. So again, great option again. Buyer finance means the buyer's paying for it. And you'll notice if you look at the monthly payment in this example, which is purely just a payment example of an interest-only payment, you'll notice that the difference in payment is only like $98 a month difference, or sorry, $108 a month of difference. So again, $20,000 financed is only about $100 to $110 a month difference in payment. So again, if that's holding you up from getting a transaction into contract, it's just going to be aware that this is a solution if the seller is not willing to pay commissions.
Got it. Thank you. All right, buyer paid.
Buyer paid. This is the worst option. That's why it's in red, and that's why it's the thinnest of the group.
Yeah,
buyer paid
out of pocket is
exactly.
Describe this. Yeah.
So you'll notice that the biggest change in this category is the buyer's cash to close. In scarlet red, it's $230,000 versus in the other category it was $210,000 and $214,000. This is the bucket that's truly going to hurt a lot of first-time home buyers that don't have a lot of down payment. In this bucket of buyer paid, though, it could be a gift from your family. It could be something else, a secured loan, unsecured loan, something else maybe that helps bring up this money of $20,000. Again, the difference in this example, buyer paid versus buyer finance, you'll see that the rate is lower because there's no longer a need for mortgage insurance. So that difference in payment works out to be about $200 a month difference in interest payment. So again, good to know the difference there. If it was me, I would want the buyer finance element because $20,000 out of my pocket is hard money. It's real funds. If I was to get the buyer finance option and rates to go lower, I could refinance to a lower rate. So that might be a way better way of doing this.
Yeah,
but again,
I'd much rather pay $100 extra per month compared to being out of pocket $20,000 today.
Exactly right. The last option has to do with third-party lender paid. I'm looking forward to this bucket the most because at Revest, we have both real estate and lending. We're able to toggle both options that are available for the consumer or our client. There are going to be times where a lender can give credit to help pay for those third-party fees, closing cost credits, non-recurring closing costs. In those options, we can give certain credits up to certain dollar amounts. In this example, you'll see there's still the same $20,000 commission, same purchase price of $1 million, same loan amount of 80% or $800,000. But the payment is higher because we've had it given a higher interest rate. We're giving a little higher interest rate, 7.5% in this example, to be able to give rebate financing or credits to our buyer to use for closing cost credits.
Yep.
This is a fantastic mindset. If you think rates are going lower in the next couple of years, another great way to save money potentially down the road is get a credit. Use the bank's rebates to help you pay for things. You'll notice that the buyer's cash to close is still the same as the buyer financed, $210,000. That means this credit is being paid by the lender. So there's still the $10,000 of credit involved with the $200,000 down payment. So this is also another option we're going to be finding that's very viable. Mortgage brokers will have a major advantage in this category because they can work with so many different lenders that have different pricing on a minute by minute basis. So I may find a product that's best for the consumer's needs. We always want to offer multiple products, but we might find one where the buyer doesn't want to pay this. Jim, I don't want to pay this fee. I don't want it financed, and the seller is not willing to pay for it. Well, we can make up for that by paying that lender paid element by having a little higher interest rate to offset that with rebate pricing. So these are the 4 categories we have. We're actually building out an app right now that's going to really define this even stronger. So that way our buyers and sellers can feel confident that when they're presented with an offer or they're negotiating to buy a house, they can look at all these options simultaneously to make sure that they understand, if you're a seller, what the net bottom line is to you as a seller, or if you're a buyer, working with a lender that understands the different options and can present those options to you real time.
For sure. And this is really good for when you have some pushback from the seller, if you're a home buyer and they're saying, hey, I don't want to pay this, or I want to pay a portion of it, but you have a written agreement with your agent saying, hey, I'm going to pay you whatever it is, 2.5%, but the seller's only willing to pay 2%, for example, or maybe even 1%. It's really good to have this Excel spreadsheet, which is what it is right now, to kind of figure out what's the option that's best for you, and also to kind of link up with a broker who can help you navigate that as well, and of course, an agent as well.
Yep, and we're building this out as we speak. It's going to have videos in it. It's going to have toggle down options, so you'll be able to see your situation and make the different changes. We already have a tool like this. It's called Goalie, and we're rolling that out this next week, which is exciting. So reach out to Jason, say you want his mobile app to learn more information, because it is going to be a very valuable tool. And if you're interviewing realtors on the buyer side, or even the listing side, if they don't have this tool, you shouldn't work with them, because they are not being creative. And they may not be able to be as creative because they don't own a mortgage and real estate company. So again, everyone's going to have a different take on this, a different stance on it all. I feel like our stance is very, very strong. Being able to be customized, the whole reason our company was created, whole reason Jason's on our team, whole reason I'm here is because everyone's plan is different. Everyone's objective is different. So super exciting times, super stressful and complex times. If you have the right professionals, you're going to be fine, because they will help you make the right decision. Your choice is what matters most, not just being shoved one option and say, take it or leave it.
Absolutely. You know, the knee-jerk reaction, now is the best time to buy, now is the best time to sell, but yeah, we can create custom solutions for you guys. And so, yeah, I appreciate you joining us today, Jim, and we'll provide our link in the video description below if you guys want to reach out to us, if you guys want this, tool to kind of figure out the best way to navigate this new settlement that was just announced, or actually just was enacted about a week and a half ago. So everyone watching today's video, we appreciate so much. Like and subscribe. And of course, check out the video description below for some resources for you guys. Hope you guys have an awesome day. Look forward to seeing you on the next video.